Hi guys, Zaheer Anwari here on behalf of the dynamictrader.com. Can you guys hear me okay? And actually, let me share my screen as well. Okay, can I get a screen check? Can you see my screen as well there, please, administrator? Yeah, fantastic. Okay, so before I get into today's analysis, I thought I would just direct your attention to the London Forex Investor Show. So I am presenting there on Friday. It's here in London. And if you guys are in London, if you're in the UK or around the UK, then please feel free to come down and see me present. It'll be a great day. In addition to that, the ticket is actually free. So if you guys email me at the end of today's presentation, I'll be able to give you a code that you can then put into the registration form for a free ticket. So you save yourself £25. Okay, so just bringing your attention to that. That's the London Forex Investor Show. That's this Friday in the Novotel in Hammersmith. Okay, guys, I'm going to go into the presentation. So, administrator, if you can tell me if you can see my I was about to say Instagram. Where are we? Yeah, there we go. Okay, can you see my e-signal charting package there? Yeah, charts. Yes, brilliant. Okay, what's happening? I assume that's a whole name. Thank you very much for joining in. Anis, hi from London. You're in Dubai. Fantastic. Okay, great. I think there's, obviously I don't always know who's tuned in and who isn't, but it's good to interact with the people that are in here. So please feel free to ask any questions that you have. Well, now that is not good. Multiple personalities not known. Okay. Yeah, multiple personalities, I guess they can be useful depending on your environment. As long as it's done in a safe way, I guess that's the most important thing. Yeah. Otherwise, you want to always get away with it. But let's get down to the analysis. Okay, so what you can see in front of you is my chart setup. All right, so what you have is the monthly chart, the weekly chart, and the daily chart. Okay, so brief background about myself. I am a long-term trend trader, hence why I look at the larger time frames. I don't go down to a 4-hour, 1 hour 15. It doesn't matter what I'm doing. Entry points, exit management, trading stop losses. I don't go lower than the daily time frame. So in this analysis, you're going to always see analysis from a larger perspective. There are many benefits that come with this. One of the main benefits is that when you first start trading, so I started trading in 2007. When I first started trading, I was a photographer. I was in employment effectively, and I was working pretty long hours, so I needed a style of trading that could be adapted around that. If you are in employment, then day trading then kind of runs parallel to that, and you have two sort of 9-to-5 jobs effectively, and it's not something that I was either keen on or neither had the time to do. So by looking at the larger time frames, you then step back, and whatever's happening intraday is of no concern. So you only need to be looking at the screen once or twice a day, beginning of the day and at the end of the day. In addition to that, the profits tend to be larger and more consistent. Most people will think that profit is more consistent by trading on the lower time frames, but it's actually a false economy. The more you do in trading, the less you make. You want to switch that around. The less you do, the more you make. Let your positions run. We've heard the expression that the trend is your friend. Of course, there are trends on the lower time frame. I understand that, but the large trends are on the larger time frame. So if you can stay in a trend for weeks to months, that profit will just accumulate. And when you understand compounding and you start compounding into positions, you then start seeing that growth that you're looking at. And this isn't, this approach isn't a new approach. This is actually an approach that has been in play for decades. Warren Buffett uses that approach. Okay, he's an investor, but he uses that approach. The turtle traders, John W. Henry, or George Soros, Jim Rogers, all these famous investors and traders that we know, they're all long term. So you really want to be looking at how those traders have made their money and emulate it. Don't get caught up in thinking that short-term trading is the way forward. The reason why a lot of people go down the short-term route is because it's very well advertised. It's all over the internet. But just because it's all over the internet doesn't mean that it's the right approach. I'm a trend trader, and we've all heard about trend trading, but very few people understand the intricacies of it. And that's because there's not much information out there on trend trading. And that is where I come in. That is where the dynamic trader community come in, and that is the ethos that we're trying to instill in traders. Look at the bigger picture. Okay, so the monthly, the weekly, and the daily time frame. Now, in addition to that, focus on price action. Don't focus on MACDs and RSI and stochastic and Fibonacci's. And, they have their place in trading. But remember, price action comes first. Price should be your number one indicator. Any technical indicators that you use, they're mostly lagging. Support and resistance is a leading indicator, and that's a very, very useful indicator. But all other indicators, particularly subchart indicators, they are lagging. So use lagging indicators to confirm what price is saying. Don't use it to predict. Never predict. Let price make its move and let price dictate to you what to do. Okay, it's a far simpler approach, far simpler, less stressful. No chart, no sound. Okay, guys, I've just got a message saying that there's no chart and no sound. Administrator, can you confirm that you can hear me okay, please? Or someone out there? Yeah, sound okay. Good. Charts okay. You can still see my charts. Yeah, fantastic. Okay, brilliant, Anis. Thank you so much. Okay, brilliant. Must be a local issue. Okay, now the monthly and the weekly and the daily are used in unison. The monthly is where I look for support and resistance, and you can see that I have a support and resistance tool on here. So the red tool is highlighting resistance. The lower tool, the support, the green line, that's the support. And I also have these annual levels. So the pink line, that represents the highest price of 2015, the lowest price of 2015, and the closing price of 2015. So I have support and resistance on the monthly time frame. Now there is an algorithm and there's a logic to why it's being displayed like this. There's a logic to everything that I do, but the advantage to having good software is that if a lot of people are probably using free source software. That's what I'm assuming. Very rarely do I speak to private traders who have invested in good software. They're either using MetaTrader or they're using the platform that their broker gives them, and the downside to using free software is that there's a lot of manual labor involved. Just look at support and resistance. You have to draw your support and resistance on every single chart that you look at. And that's a lot of work. And then if there's a lot of work involved, the natural process is to make your portfolio smaller because you don't want so much work. And that's an incorrect approach, because what you want to be looking at is the most liquid instrument at any period of time. If you're only looking at the euro dollar, but the money's in the pound Canadian dollar, you're trading an incorrect instrument. So by having good software, it eliminates all of that. So you can see that the support and resistance are already highlighted. If I just click on the Aussie dollar, Canadian dollar, you can see how the tool will automatically highlight those support and resistance. And it's doing this in a second. So what's literally taking me seconds will take people with free source software hours. And this is one of the reasons why I literally spend minutes a day looking at the chart, looking at my charts. I hear a lot of people saying that they enjoy trading. I enjoy trading in the sense that I enjoy that I understand how the markets work. I enjoy the freedom it has given me. I enjoy all of the elements of being a trader, but I don't enjoy sitting staring at a screen for hours at a day looking at candlesticks. There's nothing enjoyable about that. I enjoy the empowerment that trading gives me, trend trading gives me. I enjoy the fact that I can spend my time doing other things without compromising on profit because I'm looking at the bigger picture. So, what you want is to have good software that will empower you in that way. And that involves investing. A lot of the time people don't want to invest. They think that they can do trading on the cheap. There is no business in the world that you can do on the cheap. And trading is a business. And that's the mindset that a lot of people need to come in. So have good software and have your support and resistance on the monthly time frame. Now, I had the weekly and the daily time frame below. Notice how very clean it is. I haven't got any indicators on there. What I've got is the the weekly 200 on the weekly time frame and the daily 200 on the daily time frame. We need to have the 200 moving averages on there. The 200 moving average is a very significant moving average because it tells you the overall bias. And again, this logic comes from before the internet. Traders used to use the 200 moving average to give them the long-term direction of the trend. So what does that mean? That means what we want to see is the weekly and daily both below their 200 moving averages. If the weekly is below the 200 and the daily is above the 200, then there is an issue. We want to see both of these moving in the same direction. So I want to see either below both 200 moving averages or above both 200 moving averages. So I'm looking for strong bullish environments or strong bearish environments. So here, looking at the Aussie dollar, US dollar, you can see we're below the 200 on the weekly and we're below the 200 on the daily. Okay, now in addition to this, I'm going to load up another moving average. And that is the 50 moving average. And my moving averages are all simple, guys. I know that's going to be a question that will pop up. They're simple. All right, and what do you have? Well, the 50 moving average is also a proven level of support and resistance. Okay, it's a proven level of support and resistance. So in a strong bear market, I want price to be below the 200 and I want the 50 acting as a level of resistance. And I want that on both time frames. I want price to be below the 200 and below the 50 on the weekly, below the 200 and below the 50 on the daily. If I don't have that combination, then I don't want to trade that particular instrument. The other reason why the 50 moving average is actually a very good indicator is because the angle of the 50 moving average can tell you the trend. So if it's heading down, we're in a trend. If it's heading up, let's have a look at an example. Let's go to the Swedish krona, for example. If I just move it back, if it's heading up, then it's in a bull trend. And of course, in a bull trend, you want it to be acting as support. If the 50 moving average is quite flat, like it is here, then we don't have a trend and we're in consolidation. We can see that anyway. Looking at what price is doing, we can see it's in a consolidation anyway. But the 50 moving average confirms that. Look at it, it's just flat, it's just sidewinding. And that's as simple as I can keep, as I want to keep my chart at the moment. And so now what I'm looking for is all three time frames to tell me we're either in a bullish bias or a bearish bias. That's when I will take the trend. If I have any other combination, I'm going to be standing aside. So let's look at the Swedish krona. So we're looking at the US dollar Swedish krona. And this was a trade that I took back in 2014, 2015. And you can see that, look at this bull run. A very bullish trend. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So about 12 months of bullish trend. After every move, price consolidates. That's a natural feature to price. You can't expect price to continuously move in a direction. It's not going to do that. It moves, it consolidates. What we're then looking for is a breakout. In an area of consolidation, we're looking for a breakout. Now, this is the thing. While one currency is in consolidation, another currency is in trend. Or maybe the whole foreign exchange market is in consolidation. Where is the money gone? Well, the money's gone to US stocks or commodities. That's why you don't want to focus on just one market. You want to focus on several markets and move to where the money is. Again, that comes with having good software. Having free software doesn't tell you where the money is. It doesn't. So you have to focus. You have to always question, why is that software free? Why are they giving me free software? Why is a broker giving you free software to trade on? Why? Does it have the same agenda that you have? Question, always question. And if you're not coming up with the right conclusion, look to something that is giving you the answer that you're looking for. Now, the pink lines, in addition, are very, very useful. Why? Because the pink lines also give me a bias. So in a strong bullish market, I want to be trading above the high of last year. In a strong bearish market, I want to be trading below the low of last year. If price is trading within those pink lines, it's a consolidation. I can very clearly see how price is consolidating. And so this is something I'm not interested in trading until I get a breakout, either to the upside or the downside. My bias is with a breakout to the upside. I'm not going to predict it. I'm going to let price dictate, but my bias is with a breakout to the upside. Why? Because the trend is already up. This is simply a consolidation in the long-term trend. And I would favor a breakout to the upside than the downside, but of course, let price dictate. Now, if we go to the weekly, we're above the 200. The 50 moving average, guys, look how flat it's becoming. And it's flat on the weekly because price is just going sideways. And on the daily, which we've already looked at, well, there's absolutely no trend. Price is trading above the 200 moving average. It's trading above the 50, but there's no angle on the 50 moving average. So looking at this chart, you can see straight away why it's not tradable. It's within the pink lines. 50 moving average is flat. The same on the weekly and the daily, but the reality is that price is just within a consolidation. Simple as that. That's how clean and that's how simple my analysis is. Let's move on. That was the US dollar Swedish krona. We look at the Aussie dollar US dollar. Again, if I open up the monthly chart, price is trading within those pink lines, and you can see very clearly it's in a consolidation. The long-term trend is bullish. That goes without saying. The long-term trend is bearish. In fact, the long-term trend has been bearish since 2011. It doesn't always move in a straight line. It moves, consolidates, another move, now in a consolidation. And that's because of the round number acting as a level of support. It's struggled to break through that since September. September, October, November, December, January, February. It's trading with those pink lines. So this alone tells me that this is not tradable. I need to see a breakout. As the trend is bearish, we want to see price break out to the downside and move to the next level of support, which is 0.60. If it clears this level, 0.50. Always look for price to move towards round numbers. And round numbers are significant. And you can see that looking at this particular chart. Look at this high point here. 1.10, it's a round number. If you look at this pivot, 1, it's a round number. If you look at this pivot here, 0.80, it's a round number. If you look at this whole consolidation, 0.90, it's a round number. So you can see how price reacts to round numbers. 0.70, 0.60, bounce to the upside, 0.50. Now the key thing to remember is that always go in the direction of the trend. Just because price comes to a round number and we've seen price bounce doesn't mean that it's going to bounce again. You want to favor the trend. The probabilities are in the direction of the trend. You may, of course, see a bounce, and that's where a trailing stop loss comes in. But don't predict the bounce. Don't predict the bounce. Favor a break to the downside, and let price then move to the next round number. Okay, guys, the people that are in this chat room, are you understanding what I'm saying here? Please, can I just get a quick yes in the chat room? Is this TradeStation? Looks like new version. No, Anis, it's not TradeStation. Sorry, it's eSignal. Okay, so if you look in the top left corner, you can see ES. So this is eSignal. What you're seeing here are our proprietary tools. So for example, this support and resistance tool, this is not one that's readily available in eSignal. Okay, so what I'm showing you here are certain proprietary tools that we have. Okay, so let me just have a look at this. This is Tamas. This is an interesting webinar. No disrespect, and I think I understand what you say, but you kind of against anybody else on the webinars. I don't know what you mean, but are you saying that I'm telling people to trade long term instead of short term? Tamas, can you just clear up your point there, please? What you're saying is you bet based on weekly, daily, you win big or lose big. I don't believe that this is his only strategy. Also, extra attention on getting new software. His affiliate is suspicious. Okay, Jay Cooper. Okay, I can understand what you're trying to say here. Okay, let me just clear up some points. First of all, I'm not affiliated to eSignal. So I do use eSignal, and I do wholeheartedly endorse eSignal as software, but I'm not affiliated to them. So what that means is, Jay Cooper, if you go to eSignal and you tell them that Zaheer Anwari, my name, recommended me, it wouldn't mean anything to them. because they don't know who I am. So I'm not affiliated to anyone. I'm not affiliated to any brokers. I'm not affiliated to any software. Okay, so I don't make any money from anything else. Okay, in addition to you either win big or you lose big, that's totally incorrect as well, because my risk is never more than 2%. Any trade that I take is never more than 2%. But if you think about it, I can hold positions for weeks to months. So you've heard the expression, cut your losers short, let your winners run. So any losing trades that I'm in, typically I don't risk more than 2%. Some of my trades are 1%, some of my trades are 0.5%, depending on what market conditions are. But by letting my positions run, so imagine I get into a trade and it's a losing trade. Okay, I'm out. I lose 1 or 2%. But if I get into a trade and it's a winning trade and I'm in that trade 8 months later, 9 months later, 10 months later, then you can imagine the compound growth that I've achieved because I've continuously added trades, added positions into that winning trend. So Jay Cooper, what I would suggest is really sort of ask the right questions before making any assumptions about people that are doing webinars, because we're not all the same. Okay, some of us genuinely have an interest in helping other people. So please ask questions rather than putting comments like that in the chat box. Okay, right, now let's move on. Tomas, yeah, of course, like looking at the bigger time frames, definitely, yeah, I totally understand that. There won't be any there won't be many people out there who will tell you to trade on larger time frames. You're totally correct, and that's fine. People have different strategies, and lower time frame strategies will resonate with certain people, and the larger time frames will resonate with certain people. So you have to find what resonates with you. Okay. Recognizing Chris and responding them openly, I respect that. Thank you. You're very welcome, Jacob. I'm not here to turn this into a slagging match. This is what I do for a living. I appreciate your opinions, and I'm here to sort of break down some of the myths, regarding trading. So I'm very, very happy for people to question and double check what I'm about. That's totally fine. Okay. You scalp on the monthly time frame. Wow. I've never heard of scalping on a monthly time frame. I would assume scalping is a short-term strategy. So I'm not sure how you do that, numbers, but fair enough. If it works, then it works. What is your advice to traders who aspire to become full-time traders and make money to pay bills each month? Okay, I would say that trading is not a get-rich-quick scheme. And if you come into trading to pay for your bills on a monthly basis, then don't. Because what you will then do is, okay, fine, thank you. Sorry, I missed the joke there, numbers. Look, trading, guys, is not what most people think. Okay, I have this conversation a lot of the times. All right, and it's true. A lot of people are fed up with the 9 to 5. A lot of people want to get out the 9 to 5 grind. But trading is not your way to get out the 9 to 5 as a replacement for a job. What I mean by that is, if you're earning 40,000, 50,000, 20,000, whatever it is, if you're earning that as a salary on an annual basis, you can't then come into trading and think, well, you know what, I can just make that trading. I'm going to try and make £2,000 a week or £2,000 a month from trading because that's what I do for my job. And that is a very incorrect approach. Trading is not about you can't target 10% a month or £2,000 a month. If it was that simple, guys, why do 95% lose? And that's a very real fact. 95% lose because they come into trading thinking that it can be a job. Trading is there to leverage your salary and savings. You have to be smart about this. Whatever you're making through your job, funnel it into a trading account. Don't put it into a savings account in a bank. Don't limit yourself to buying a house, buying property. Funnel it on a monthly basis into a trading account. And build your account by saving and trading it, and be realistic. And then give yourself a time frame, like 2 to 5 years. If you have a good starting amount, within 2 to 5 years, you can generate a good amount of money that you can then make an informed decision on quitting your job. doesn't mean that you'll become a millionaire. You have to do it in stages. So when I started in 2007, my first goal was to quit my job, and that took me 4 years. All right. So since 2011, I've been a full-time trader. Now, since 2011, of course, my compound growth has been further achieved. And that is how you guys want to do it. You got to be sensible about it. You can achieve anything that you want in trading. The empowerment that comes with trading is unbelievable. And the confidence that comes with achieving success in trading is fantastic. But it's not going to happen straight away. Okay, so I really hope that what I'm saying with you guys resonates. Don't listen to the get-rich-quick schemes that are out there. Trading is not one of them. Trading is more consuming than 9 to 5. Well, a lot of people will make it more consuming. But by having trading running in the background, then it won't be consuming. You can go to work, you can do your 9 to 5, you can spend time with your family, you can do everything that you want to do with trading working in the background. Work smart in trading. Work hard in real life, get the money, get the salary, feed your trading account. Work smart in trading. What trading does is it speeds up the retirement phase. What most people try and do is use trading to cut out the grind. They don't want to do the 9 to 5. You see all of these young kids going on the internet thinking that they can turn to trading and not have to grind, not have to work the 9 to 5. Working that 9 to 5 is essential because it makes you grow. It gives you skills. It makes you into a person. It turns you into an adult. But staying within a 9 to 5 is a massive risk. It's a massive risk just sticking to a 9 to 5. Why is it a massive risk? Because you are at the mercy of your boss. And I understood that when I was working in a 9 to 5, that I was at the mercy of my bosses, right? I quit my job once I was able to. So don't look at trading as a way of cutting out the grind. Looking at a way of speeding up the retirement process. Dina, I take out money as and when I need it. It's as simple as that. I've come to a point where I can take out money and it doesn't affect my compound growth. Yeah, I can take out money on a monthly basis to fund my monthly account or lifestyle, or I can take out money in a chunk. If I want to buy a new car or if I want to go on holiday or whatever, if I want to take out money in chunks, I can do that. Okay. How do you trade your stops? That is really a scope for another day. I can't really talk about things like trading stop losses because that requires experience and trade and understanding. Okay. Right. All right, guys. So I basically answered all your questions. Thank you, guys. Thanks for all the the positive comments because today is all about my time with FX Street. It's just 45 minutes, and within this time, why are we brainwashed to trade short term? Okay, well, I mean, you have to always ask yourself who's pushing short-term trading. A lot of brokers will push short-term trading. Why do brokers push short-term trading? Because they make money from your spreads and your commission. I typically trade as a trend trader. I typically make about 50 trades a year. Okay, 50 trades a year. Most people will do that in a day, 2 days, or even a week. Think about how much money a broker is making from day traders on a daily basis. A lot of the times I get phone calls from people, brokers. Oh, we're from so-and-so broker. I would like to know if you want to open an account with us. Obviously they found my details somehow, LinkedIn, whatever. And I instantly tell them what kind of trader I am. They're not interested in any conversation beyond that. Put the phone down. Okay. Self-control is essential, and that really comes from understanding the market. So let's go back into the markets. Let's do a bit of analysis, okay? So Aussie dollar, US dollar, very much in consolidation between the pink lines, below the daily 200, below the 50. So the weekly is looking good, but below the daily 200, but above the 50. So this is not looking good because in a bear market, I want to be below the pink line. I want to be below both these moving averages, and I want to be below both these moving averages. I'm not below the pink line, and I'm not below the 50. In addition, just consolidation. Not looking attractive. Okay, let's go to some currencies that I am looking at. The pound Japanese yen is a currency that I'm looking at. Okay, now, why am I looking at this? Well, we can see it's in a downtrend, and the monthly chart is moving to the downside. We're seeing nice clean momentum. Okay, so ideally I want to see price move towards 140. Look, it's trading below the low of last year. Okay, if we go to the daily time frame, we are below the daily 200 and we're below the 50. Okay, so that's looking good. And look at the movement. Look how it's moving. And even with this correction to the upside, it found resistance at around 50. So you can see how it interacts with the 50 previous support level here, which became resistance. Okay, and you can see how it held strong, moved to the downside. And look how quickly the trend moves when it's in the direction of the trend. It's currently struggling around this level. Why is it struggling around this level? Because the weekly 200 is acting as support. So what we need to see is price clear the daily 200. If it clears the daily 200 and the 160 level, then this would be a trading opportunity. Now, I know what we want to see is the 50 below the 200. You are totally correct. But remember, this is a much slower moving time frame, the weekly. So if I have one factor which is not lined up, like in this case, the moving averages, I would still trade this, but I would drastically reduce my risk. So instead of risking 2%, I would risk 1% or 0.5%. So this is where discretion comes in. Okay. So everything is suggesting weakness below the low of last year, below the daily 200, below the 50, 200. We're below the, below the daily 200, below the daily 50. We are below the daily 50. But we're not below the daily 200. If we break below the daily 200, then we'll be below both moving averages, which is great. But ideally, we want to see the 50 below the 200. And that will take some time. And for that reason, I will reduce my risk. But this is one that I am watching. Another currency that I have a keen eye on is the dollar yen. Okay, so let's have a look at the dollar yen. So we can see that price is trading below the low of last year. So we have a bearish bias. All right, it's currently faced with 110 support. That's why we're seeing a bit of a bounce to the upside. But if it breaks 110, then we could see a nice clean trend all the way down to 100, even lows of 80 and 75. And you can see the trends before, guys. This was very profitable. If I just open up the dollar yen, okay, you can see the trends that were in play before. Very profitable trends. Again, we look at the daily chart, below the daily 200, below the daily 50. And on the weekly time frame, below the 50, but not below the daily. Excuse me, we're below the weekly 50, but not below the weekly 200. So if we see price break below the weekly, then we'll see alignment on both time frames. Now, going back to a point which Tamas made. Thank you, Tamas. I wish I could have self-control. Of course, you know, fundamental to trading, to see price break below the 200 would take some time, may take some weeks. And this is where people get frustrated, because we are so conditioned to make money as a 9 to 5 that you bring that 9 to 5 logic to your trading. So you try and make money on an hourly basis or a weekly basis or a monthly basis, because you're trying to mimic the way we are conditioned to make money. Money is not made like a 9 to 5. Money is made in periods. So let's say, for example, in a 3-month period, I make 50-60% on my account. So in a 3-month period, I make excellent compound growth, 50 to 60%. But then for the next 3, 4, 5 months, I might not make any money in foreign exchange. So I don't make any money. However, because I'm looking at stocks, I move to the stock market or the commodities market, because that's where the money is. What the mistake that a lot of people make is that they're just focusing on foreign exchange. And if they're just focusing on foreign exchange, then if there's no money in foreign exchange, you're sometimes trading at a time where there's no liquidity. And that's where you then start over risking, because you want small moves to equate to large sums of money. Look at some of the trades that I've taken in the past. This is the Marriott Hotels. Look at this trend, $40 all the way up to $80. This was a trend, very profitable trend. Look at Delta Airlines. Nice run up. Okay. Look at Southwest Airlines. Nice bullish trend up. Okay. Look at KR, which is Kroger Co. A nice trend to the upside. Look at Joy. This is what a trade that we shorted, a trade to the downside. Okay, look at CBS, trend to the upside. Look at Disney, trend to the upside. Guys, I hope you guys are starting to get what I'm saying here. Yeah, can I get can I get a yes in the chat box, please, that you guys are really starting to absorb what I'm saying here, that don't just focus on foreign exchange, look at all the markets and look at the bigger picture. Okay, it's really, really, really important. Zaheer, please accept my LinkedIn invitation. Yes, Anis, I think I've just answered your question there, right? Yeah, exactly. Fantastic. Okay, so I've just answered your question. Yeah, what you want to be is a trader. You don't want to be an FX trader. That is where people go wrong. If you go on social media, all you ever see is people say FX trader, FX trader. If you know people are trading just FX, what they're doing is they're getting caught up in the hype surrounding FX. Okay, is TradeStation a professional software you can use, or it's broker provided and just so? I used to use TradeStation and several years ago, but I don't use it anymore. eSignal is by far the best charting package in the industry, without a doubt. But for that, you need a proper broker and a bigger capital than most of us have. Okay, the thing about this is that, of course, you do need to have money when you start trading. The mistake that a lot of people make is that if they don't have capital, they day trade, because they want to day trade to make capital, and then once they have the capital, they'll trend trade. I hear it all the time. I don't have the money, so I'm going to day trade for the next 10 months. Once I've got the money, I'm going to come to you and learn how to trend trade. I hear it all the time, Tomas. If you don't have the capital, get the capital, and not through trend trading. Work, save, leverage the system, go get a loan from a bank, whatever it takes. Remember, there's a difference between good debt and bad debt. Most people are getting loans and credit cards to buy a car, to buy flat screen TVs. You put a loan into a trading account, it's a different philosophy. Now, I'm not encouraging you to do that, but I'm just saying to you what's possible. All right? Leverage the system. You look at people, like James Khan. When they didn't have the money in the beginning, they borrowed loans from the bank to fund their businesses. And look at James Khan now. You've got to be brave sometimes in life. You can't focus on just thinking a 9 to 5 will get to you where you want. It won't. How do you find long-term trends on such equity shares? DZ, really good question. Again, good software. I have a software package that scans the US stock market for me. So, there's 12,000 stocks in the US stock market. How did I find these stocks? How did I find Disney, Marriott, Southwest Airlines, Delta Airlines? I have a software called MetaStock that scans the market for me. So instead of me looking through 12,000 stocks every single day to find the best setups, MetaStock does it for me. Okay, so if you want to know how to do that, get in touch with me. In our trading community, I'm from the Dynamic Trader. We give our members lucrative stocks watch list on a daily basis. Our members save about £10,000 a year because we have MetaStock. I have MetaStock. I pay £2,000 a year for MetaStock so that our members don't need to pay for it. And we do the scanning and we give them these watch lists every single day. If you went to a stock picking website and you wanted this watch list, you'd be paying hundreds of pounds a month. Our members get all of that stocks information for free. Okay, so we save our members a lot of money. Okay, most presenters teach ST trading, short-term trading. Yeah, B, you're totally correct, but I'm not most. But you have to look at the 95% to the 5%. I come from the 5%, which is why I don't do what the most do. In trading, look at the masses and do the opposite. You really have to do that. It's a win-lose game. All right. Okay, guys, it's now 4 minutes to, well, I've got 4 minutes left before I end the presentation. Guys, I hope you guys understood how simple I've kept my analysis. Very, very simple. You can see the long-term trends in the market. Look at the euro dollar. Another example. Euro dollar, if I open up the monthly chart, good trend to the downside if I just open it up. a good trend to the downside. Now, this is where I shorted, just to give you the example or an example of pips. I shorted the euro dollar from 1.3 to 1.1. That's 2,000 pips. So I shorted it around this level here, which is in September, and I exited around April. So September, October, November, December, January, February, March, April. I held my trade for 8 to 9 months. This 2,000 pip move, I leveraged to over 15,500 pips through compounding. So, and that's 5 positions. So I've given my broker the cost of 5 trades. I've said, thank you very much. But I got my 5 compound positions in September and October, and I just held them all the way through till April. Massive compound growth for very little cost in terms of what I gave the broker, but massive reward on my own trading account. If you go to the weekly time frame, below the weekly 200, below the 50, and if I open up the daily chart, below the daily 200, below the daily 50, and look at the length of this trend. So I started shorting this around this level here, September, and exited around this level here. And that is what you call a trend. And now price is just going sideways. And look at the 50. It's just going sideways. It's flat. Okay, guys, any final questions? Is Apple breaking support today? Well, let's have a quick look at Apple. AAPL. Is Apple breaking support? Well, you tell me. Looking at what we've just gone through, if we look at the monthly chart, it's finding support at the pink line low. All right, so that is in itself is not a reason to either go long or go short. It's just stuck in consolidation. There's nothing attractive about Apple. It's finding support at the weekly 200 and it's finding resistance at 100. So it's stuck between resistance and support. It's below the weekly 50. It's above the weekly 200. It's below the daily 200. It's below the daily 50. But opening up the daily chart, it's just stuck at support. And look at the trend. It's messy. This is not a very appealing looking chart at all. If you look at it to something like, let's have a look at Joy, which is something I traded earlier. Look at the trend on Joy. It's a much cleaner trend compared to what you just saw on the Apple stock. So don't get caught up in thinking, right, just because it's Apple and Apple products are flying off the shelves, that I should be trading Apple. That's not how it works. Okay, right, guys, I'm going to call time. If you guys want to email me, my email is zaheer@tdtpro.com. I will email you over a very, very in-depth PDF that that we have written, that Anne Chapman, one of my mentors, she has written. So if you email me at zaheer@tdtpro.com, I will get that email over to you. If you want to be a part of the apprentice training, which I have created, then please look at that here. I'll just send that link over. I know you said you're not affiliated by any broker, but what would you suggest to where to trade and what software to use, and which one is your website? There are too many dynamic traders. Okay, well, if you email me, if you look at this apprentice website, okay, that's a good place to look. In addition, guys, please follow me on Periscope. Okay, please follow me on Periscope. I'll send the link here, but I would really appreciate if you guys follow me on Periscope. I Periscope on a daily basis. Okay, I Periscope on a daily basis. So if you don't have the app, download the Periscope app, log in via Twitter. So you need to have a Twitter account. I'm going to be Periscoping in the next half an hour. So please follow me on Periscope and tune into it. It's basically live broadcasting. It's kind of like a TV channel. It's totally free. Please follow me on Periscope. If you're not following me on Instagram, I highly recommend that you follow me on Instagram as well, because I basically put out a lot of stuff. My Instagram handle is fx.mentor. Okay, fx.mentor, fxmentor. Please follow me on Instagram. And if you want to check out our main website, then that is thedynamictrader.com, www.thedynamictrader.com. I don't think I've written it very well, but you guys will get the idea. www.thedynamictrader.com. There you go. That's better. Okay. Whew. Sorry, I tried to get all of that in a real quick rush. Okay, guys, if this resonates with you, please stay in touch with me. Please contact me, and we can move things to the next level. Okay, let's take trading to that place where you want it to be. Okay, guys, have a great morning, afternoon, evening. Thank you, administrator. Sorry for going over a couple of minutes, and see you on my Periscope, which is in half an hour. Please follow me on Periscope. Take care, guys. Have a good morning, afternoon, evening. Take care. Bye-bye.